everyone. I am Dr.A.Vijaya Shree, Assistant Professor of Commerce. Today in this video, we are going to see about a introduction about goods and service tax. In general, it is termed as GST. To start with, we are going to see about the learning objectives in GST. First, we are going to know about the meanings of GST and what are its characteristics. We are also going to learn about the historical background of the introduction of GST in India, and also we are going to have a clear idea about its futures. First, to start with, we shall see some of the introduction or meaning about GST. GST, it is also known as goods and service tax, and it is an indirect tax which replaced many indirect taxes in India such as excise duty, VAT, service tax, etc. In India, GST was introduced in the year 2017, that is on 1st July 2017, GST was introduced as an act passed in the parliament on 29th March 2017. So, unified tax system that replaced multiple indirect tax, which is controlled both by the central government and state government. These goods and services which are collected are monitored or controlled and regulated by the central government. The tax is included in the final price and paid by consumers at a point of sale and passed to the government by the seller. So, we can also say that GST is a single rate across the nation, and also it helps to avoid tax avoidance and easy for the government to monitor. Next, to see about the journey of GST, this picture gives an overview of how GST is being introduced in India. To start with, Vijay Kelkar Task Force 2004 strongly recommended that the integration of indirect taxes in the form of GST in India. So, later on in the Union government in Union Budget 2006-07 announced that GST would be applicable from 1st April 2010. So, after several meetings and implementation and forming several committees, Government of India has issued first discussion paper in November 2009, and Finance Minister in a speech announced that GST will be rolled out by April 2011. So, as per these meetings and recommendations by the committee and council, the Constitute 122 Amendment Bill introduced in the Parliament in December 2014, and in Lok Sabha the bill was passed on 6th May 2015. So, thereafter on June 14, 2016, the Ministry of Finance released a draft model law on GST in public domain for views and suggestions. And on August 3, 2016, the Constitution, that is 122nd Amendment Bill 2014, was passed by Rajya Sabha with certain amendments. So, after all these amendments, the final step, the Constitution 122 Amendment Bill 2014 came into force, was taken when the Honorable President of India gave his final assent on September 8, 2016. So, as per the force, both the government, state government and central government monitored the GST. So, finally, the multiple indirect tax framed as the goods and service tax came into the structure from 1st July 2017. And we all know that GST comprises some of the indirect taxes which is previously followed in India. This slide gives an overview about the various central taxes and state taxes which are followed in India, which are all subsumed in the form of GST. That is what we say as one nation, one tax. Central taxes, there are list of duties given under central taxes, that is central excise duty, additional duties of excise, service tax, so on. And in the form of state tax, state VAT, central sales tax, purchase tax, entertainment tax, etc. So, these indirect taxes are all subsumed in the single tax that is known as goods and service tax in India. And In this slide, this gives an overview about the GST framework. That is the GST can be classified as the central GST, state GST, union territory GST and IGST. In short, it is termed as CGST, SGST and IGST. So, what is the purpose of having IGST? Means if we are having a supply of goods or services within state or intra-state. So, depending upon the state, the framework of GST have been classified. So, depending upon the state transaction, if the transaction is carried out within the state, the government CGST and SGST will be monitoring the collection of tax. If the business people are doing the transaction between the states, that is interstate, there comes the IGST format, that is interstate goods and service tax. So, apart from this, for the union territory, there is a system followed as UT GST. And next comes the rates of GST. So, for all the goods and services in India, various rates are being followed. For example, there is 0% tax, that is nil tax also followed for some goods and services, and for some goods and services we are following 5%, 12%, 18% and 28%. These differs as per the regulations or recommendations passed by the GST Council and is subject to various amendments laws. So, next, there is also an exceptional limit or some items which are kept outside GST. For example, alcohol for human consumption. This doesn't comes under the GST law, that is it is power to tax remains with the states. And also petrol, that is 5 petroleum products like crude oil, diesel, petrol, natural gas and AFT, that is aviation related fuel. These are also kept outside the GST, and these tax will be monitored by the GST councils. And also tobacco is also not coming under the GST, part of GST, but power to retain or exempted is depending upon the GST council. And entertainment tax by the local bodies, it is also powered by the local bodies of the state government. So, these are all the items which are kept outside the GST. It doesn't comes under the rates of GST. And we all keep saying that goods and service tax. So, before going inside the topic, we should be knowing about what are the items which are termed as goods and what are the items which are termed as services. So, goods refers to the transaction, that is identification of transaction is essential. That is, it is an movable property which also includes actionable claim, or it can be a growing crops or grass or things that are attached to or form in part of a land which is agreed or to be served before the supply. And we have to note that goods does not include money and securities. And so, what is the meaning of service? So, service can be generally said as other things that are outside, that is goods, money and securities. Apart from these, other transaction can be said as a service. It normally involves use of money or the conversion of money or by any other mode or currency or denomination. So, these are included as the services. To be in specific, Schedule 2 of the CGST Act enumerates various circumstances where an activity would be treated as a goods or it can be treated as a service. So, these Schedule 1, 2, 3 will give a brief explanation about the services and goods. So, next we shall see some of the features of GST. To start with, we all say that GST is a single indirect tax, or we can say as one tax, one nation. So, what does that means? GST is a single unified tax which is a combination of value added tax, excise tax, service tax. We also seen about the various central tax and state tax which are subsumed in the GST. So, this reduces the problems which are arising in the collection of tax, and we have a clarification on the basis of various rates also being followed. So, depending upon the nature of goods and services which are ranging from 0% to 28%, the tax are being collected easily. So, next important feature we can say as registration exemption for small business. So, we all know that there is a registration procedure followed in the GST. It can be voluntary or mandatory or by notification given by the officials. So, there is also an exemption limit for small business. So, what is the limit means? Usually an aggregate turnover can be 40 lakhs. If the turnover increase above 40 lakhs means the person has to compulsory or mandatory registration should be made. So, what about the small business? So, if business people who are doing a business aggregate turnover of 20 lakhs or 10 lakhs, they are exempted from registration. So, only those persons whose turnover is above 40 lakhs in states and union territories have to make registration, and there is also an exception, like in some states of India, there is special category states, they are following us 20 lakhs and 10 lakhs, that we will be seeing in the next slides. And next feature we can say as 4-tier tax structure. The 4-tier tax structure is nothing but there are various rates which are followed in the GST structure, that is 5%, 12%, 18 and 28%. To say a few examples about that, 5% includes essential goods, life-saving drugs, etc. 12% includes goods such as apparel items, packaged goods, food, nuts, medicines, etc. 18% comes under electronic items, consumer durables and many services. 28% includes luxury goods such as car, tobacco, aerated drinks, etc. Apart from this, there are also 0% tax, that is nil rate, is also being followed for some essential goods, and also special rate tax, that is 0.25 and 3% are imposed on luxury goods like precious stones and jewelry. So, depending upon the tier of system, that is rates, the business people can easily follow the GST method. Next feature we can say GST composition scheme. There is a scheme in GST which is termed as composition scheme, but every taxpayers cannot opt for this scheme. It allows only eligible business people who have a particular turnover. So, what is the turnover means? They have to have a turnover of 1.5 crores. So, only the person who are having a turnover of 1.5 crores are allowed to go into this composition scheme. And also there is some variations in this scheme, like in northeastern states and Himachal Pradesh the limit is 75 lakhs, and for some special composition schemes for service providers the turnover limit is 50 lakhs. So, only these persons can go for the GST composition scheme, and one particular point about this, that the persons who are following the composition scheme cannot claim the input tax credit, which we are going to see in the consecutive slides. So, next we are going to see about the input tax credit system. So, what is this input credit system? Shortly termed as ITC. It is nothing but the claim for the GST paid on inputs, that is for the manufacturing of certain products we need raw materials, capital goods, service, etc. So, those taxes can be claimed back. So, under the GST system, only the final consumer is the ultimate person who are paying the tax. So, from the supply chain includes manufacturer, retailer and the final consumer. So, the tax will be paid at each stage can be claimed back as the input tax credit. And next feature we are seeing is invoice matching. So, what is the invoice matching is that we all know that GST is an e-portal based and all the vouchers should be in the online mode. So, the supplier who is filling the e-voucher should matches the invoice filled by the recipient. For example, the supplier files their GST 1 return, which is the return of outward supply. These details appear in the recipient GSTR 2B statement, which contain details of the purchases made and the input tax credit available, and it will be used as a reference. These GST terms, outward supplies, etc., these will be clarified in the consecutive slides. And next feature, so next feature we can say as consumption based tax. So it is nothing like, we already seen that the tax will be paid by the consumers, ultimate consumers who are consuming the goods will be paying the GST tax. So it is termed as consumption based tax. So next we are going to see about the anti-profiteering measures. So what is anti-profiteering measures is nothing but business must pass on the benefit of lower tax rates or ITC to consumers by reducing the price of their goods or service. So the GST law comprises anti-profiteering measures that include a framework to identify whether the benefits have been passed on to the consumer. So these measures help the business people to follow the GST easily. And next can be competitive advantage. So competitive advantage refers to the removal of cascading effort and the introduction of ITC, which help the Indian business people to lower their cost of compliance and cost of production. So these attracts more foreign buyers and investors. And the last feature can be said as the digital compliance and payments. So GST compliance is almost completely digital mode. So from registration to entering the returns or making payments by the taxpayers, etc., everything comes under online mode in a common GST portal. So the taxpayers through internet banking or NEFT, RTGS or debit card, credit cards will make the payment, and every applications for refunds also made in the form of online mode. So every aspect which is done in the GST is through the digital modes only. So these are all the meanings and also various structures, rates and all the common features of GST. Thank you.